Good morning, welcome to IG's Early Morning Call. It's Friday 30th of June, end of the week, end of the month, end of the quarter, end of the first half of the year, and we got risk on going into this final trading day of the first half of 2023. Let's take a look at the headlines. So following what's happening with the US dollar, which continues to rise, the dollar-yen trade has hit 145 yen. Now, this is interesting because this is the point at which the government last intervened to try and strengthen the Japanese currency. Today we've got US core PCE as one of the main deliverers of data that we've got, and that could well see a continuation of this rise in the US dollar. We've got expectations of a robust number showing inflation still continues in the US economy, and that could push gold down further. And in amongst the corporate news headlines, late last night, all sessions on the IG platform, we saw Nike stock down 4.25%, forecasted disappointing. Interestingly enough, sales in China were good, but the US was not so good, and excess stock weighing on margins. Take a look at volatility, bumping along the bottom as we've been reporting. It's the same old story. We've got volatility going down. That being said, it was a positive day yesterday, and we're holding on to that, but still below the 16 level. But the bottom line is, I think that we've got money going into these equity markets, and it's going to be a positive week going into this final period of the month and the quarter and the first half of the year. 74.97 that we've got on the FTSE 100. And could we see a turnaround on the MACD at the bottom here? We've got a little bit of a bottoming out of the blue line here. When that goes over the red dotted line, could that signal a renewed interest on the upside for this market? German DAX, like the FTSE, were up on the week overall, bouncing off the 76.4% retracement. We're now consolidating above the 15,936 support level, which we've been looking at over the last few weeks or so. French CAC 40 enjoying what has been a very solid week on the markets, on from the lows that we had, which initially hit levels not seen since the beginning of the month. And that springboard off that has really done wonders for this market there as well. Let's take a look at what's happening across the Asia-Pacific markets. As we've seen the end of the quarter hit, Nikkei 225 trading down 0.1% as at the close in today's session. And you can see there as well the Hang Seng Stock Index down, but really not by a particularly large margin. S&P ASX 200 up on the session in today's trade. I want to show you what's happening with this Japanese market. Let's go first of all with what's going on since the beginning of June, just to show you that we've had a positive month there for the Nikkei 225. That vertical line is where we started at the beginning of the month. But looking back to where we were at the beginning of the year, and it really has been a tremendous run in these markets, where we've seen the low point of the year, which was down here, where we saw that market, and at the best point we're up 32%, and we closed out the first half of this year, since the beginning of this year, up almost 30% on the Nikkei 225. Much of that has been that weakness in the Japanese yen, which we'll talk about in just a few moments' time. Wall Street closed. Let's just quickly take a look back at what happened yesterday, with gains across the Dow and the S&P 500. NASDAQ ended without any move overall on the markets there. We continue to monitor what's happening on the NASDAQ, I beg your pardon. Let me just quickly bring up a look at what's happening with the NASDAQ index, because the US Tech 100 is showing signs of flatlining on from the last couple of days at 14,976. Let's take a look at what's been happening in Japan, because we've seen some interesting data out there today, and interesting levels as well for the Japanese yen. The unemployment rate in Japan remaining at 2.6% in May, and industrial production, though, falling more than expected by a margin of 1.6% compared to April. There was nothing in there to revive any fortunes for the Japanese yen. That strengthened the US dollar prevailing. In today's session, we've got a further punch higher on this chart here for the dollar against the Japanese yen. The Japanese currency is about to post its third straight week of losses against the dollar, and briefly passed the 145 yen mark earlier today. Why is that important? It's the level that in September 2022, the Japanese government intervened to support its currency. It intervened again a month later when the US dollar Japanese yen rose to 151. Now, that was back here at the left-hand side of the chart. Are we on a trajectory to meet that level? I can't see anything necessarily that's showing me here. We are overbought to a point, but the momentum continues on the upward trajectory. There's possibly here a little bit of a cresting. We saw a cresting earlier on in May, a little bit of a pullback and then a further move up. The bottom line is that the Japanese central bank doesn't seem that keen on pushing up interest rates, whereas the Fed still continues to put its foot firmly on the gas. We've got 2 more interest rate rises coming this year, according to the Fed, possibly more going into next year if inflation remains sticky. And that's the point, is the fact that we've got a reason to own dollars and no reason to own the Japanese yen. Let's stay on what's been happening overnight in the Asia-Pacific markets. I want to quickly focus on what's happening in China, because we've got a similar sort of move on the foreign exchange markets we've seen there for the Japanese yen. China's factory activity declined for a third straight month in the month of June. The official MBS manufacturing PMI rising to 49 from 48.8 in May, crucially staying below the 50-point mark that separates expansion from contraction. The services sector activity for June recorded its weakest reading since China abandoned its strict COVID curbs late last year, but remained well above 50. But I think if we look at what's been happening with the local currency, in today's session, in fact, the last 24 hours, we have gone beyond this line of prior resistance at 72,570, which has now become support. We're currently trading at 72,646. Next line to watch out for, the highs up here, which were the highs we saw on that shooting star candle back on the 25th of October last year at 73,780. Readings pushing the yuan to a new 8-month high in the session today. Let's take a look at what's been happening here in the UK. We've just got some breaking news headlines coming through on first quarter, the final reading, the final revision of first quarter growth, and it's been confirmed at 0.1%. So it is now official that we can now say beyond any debate that the UK avoided a recession. We saw a negative or a contraction in the fourth quarter of last year, and the concerns were that we may end up possibly getting a little bit of a push lower on that growth reading, but in fact that was up, and up 0.2% year on year. It was a close run thing. We know the German economy is in recession over the winter and the fourth quarter and the first quarter of this year, but it's now been confirmed the UK has avoided that ignominy. Before I take a look at the sterling trade, I want to quickly update you as well on some breaking news we've had through from the Nationwide Building Society, showing the house price index rose in June by a margin, of 0.1% month on May. We had been looking for a drop of 0.3%. Now, compared to June last year, the average house price was down 3.5% after a 3.4% annual fall in May. Now, that figure, according to economists, had been expected at a negative 4%. So again, that is better than expected, but nonetheless, we do have a shrinkage in house prices. Now, the Bank of England is putting all its efforts to curb inflation in raising the base lending rate. And this is having an effect of putting a brake on the house price index overall. Let's take a look at what's happening with sterling against the US dollar. This is down, but I think it's more a function of the stronger dollar than weaker sterling necessarily. The Bank of England still wants to raise interest rates. The central bank chief, Andrew Bailey, at Sintra this week, talking about the need to raise interest rates, but watch the data. That doesn't fill us with confidence that they know exactly where they're going with rates. Not quite as transparent as the Fed, which, as I said earlier, is looking to raise 2 more times this year, 2 more 25 basis point rate rises this year. There are around about 9 million residential mortgages in the UK, and many of those are likely to see some sort of move up in rates sometime this year. Not all those will be up for renewal this year, but those that are likely to see a massive increase from where rates were even just a year ago. But a couple of years ago, 3 or 4 years ago, 5-year rates gone from sub 2% up to plus 6%. And with house prices at the current levels, you can see why there's a little bit of concern about some of those payments that are likely to rise by a margin of 3, possibly even 4 times from where they were. Now, let's move on to take a look at some of the stocks to watch out for today. I don't know if you've been following the story around Boohoo and Revolution Beauty Group, the personal care company. There's this spat that's been developing. And in fact, I think earlier in this week, the positions for senior board members of Revolution are under threat because of concerns about where the stock was going, what the company was doing. Boohoo owns 26% of Revolution Beauty, and Boohoo voted against the board at the AGM earlier this week. I want to show you the Boohoo chart. Down yesterday again, down to 33 pence, not too far away from the record low at 30 pence that we've got. Revolution Beauty has responded to the recent statements made by Boohoo, and Revolution Beauty has repeated once again its request that Boohoo explain what its future plans and strategy are for Revolution Beauty, and what it would be if a hostile takeover by Boohoo was made of Revolution Beauty, if that was to be something that was to succeed. I won't show you the Revolution Beauty share price chart, but I think it's interesting to watch what happens with Boohoo in amongst this spat. As I said, Boohoo owns 26% of Revolution Beauty. Now, among some of the macroeconomic indicators expected today, the market will be focused on one in particular, and that's core PCE data. It's expected to rise by 0.4% in May compared to April. Year on year, the index is forecast at 4.7%, unchanged on last month. Now, the core PCE is the Fed's favoured indicator when it comes to look at price evolution. The dollar could move on the news, and so could gold. I want to show you what's happening first of all with the US dollar in respect to this. This is the dollar basket. We've already seen the dollar stronger against that weaker sterling trade, and this is pushing up here nicely now, well above the 100-period moving average. So far as this for euro dollar is concerned, you can see clearly the euro is very much on the way down again at 108.63. But I think for all this, what it means is it means that we've got a further build-up pressure on the downside for the price of gold. My price target, as I've been saying now, is 1870, which is a 76.4% retracement. But in fact, on my short trade, which I've now got the stop above the 1950 level, my price target is down here at 1804.09, which would be a total retracement of that move that we've seen there recently for the gold market. Nike shares dropped more than 4% on the IG platform late in the session yesterday after the company reported its fiscal fourth quarter numbers, forecasting first quarter revenues below Wall Street estimates. So the outlook was one of the reasons why we saw that negative swing to what was happening in the numbers. Investors were worried that sales in China would disappoint, given that the country's lackluster economic recovery is seen very much in evidence. This wasn't the case at all. Greater China was in fact a bright spot in Nike's quarterly report, sales jumping 16% after 3 consecutive quarters of declines. Let's take a look at the numbers as they came out late last night. It was the North American performance that weighed on earnings and sales, where still high inflation has led to consumers buying essential goods and reducing discretionary spending. Sales rising 5% in the region in the fourth quarter, the slowest in four quarters overall. It was a tepid report. Nike's fourth quarter revenue up to $2.8 billion, marginally beating estimates of $12.58 billion. Earnings coming in at 66 cents a share, missing estimates by 2 cents. Nothing exciting in terms of forecasts either, as Nike's chief executive said. The environment is going to continue to be promotional as the group's still struggling to get rid of excess inventories. Nike's gross margin fell 140 basis points to 43.6% in the fourth quarter. Let's take a look at what's been happening on the share price chart. This builds in on the IG platform what we saw late last night with that drop that we saw in shares, ending down 4.27%. Nike expects revenue now to be between flat to up to low single digits in the first quarter, compared with analysts' average expectations of a 5.8% rise. So you can see the outlook really dampening the situation for Nike, which is why we saw that drop late in the session yesterday on the IG platform. That stock will fall more than 4% at the start of today's cash session. Let's shift away from what's happened to what is going to happen. Later on today, we've got the Baker Hughes rig count. Before I show you what's going on there, let me quickly show you what's been happening with US crude, because it's really been against all expectations. It's been what is now looking as though it's going to be a positive week. Certainly, we fell at the beginning of the week, and then we've had this rebound here. We're flirting with positive on the week overall. But I think longer term, you can see clearly the direction of travel is on the way down. Let's just remind ourselves about last week's Baker Hughes rig count. It saw 6 oil rigs taken offline as more oil field owners judged that the market just isn't priced high enough to pump. The number of oil rigs falling to 546 this last week, their lowest since April 2022. The number of gas rigs on production rising by 6, keeping the total rig count steady at 687. I should say, sorry, that was last week's number. We got the Baker Hughes rig count out a little bit later on today. That's it from me. We're back at 10:30 with Charting the Markets. Do watch out for Boohoo and Revolution Group at the start of today's trade here in the London markets. And later on today, Constellation Brands out with numbers before the Wall Street trade gets underway later on. That's it. We're back at 10:30.